Good morning. My name is Kristen Clark, Assistant Attorney General for the Civil Rights Division of the U.S. Department of Justice. It's my honor to be joined today by U.S. Attorney Philip Selinger of the District of New Jersey. Ending redlining is a critical step in our work to close the widening gaps in wealth between communities of color and others. Less than 1 year ago, Attorney General Merrick Garland announced the Justice Department's Combating Redlining Initiative, our most aggressive and coordinated effort to address redlining to date. At that announcement, I stated that we have a duty to act now because persisting racial inequality and widening wealth gaps make clear that staying the course is not enough. Bold new action must be taken to eradicate redlining and to move closer to the goal of equal opportunity in our country. Through this initiative, the Civil Rights Division is working to make fair access to credit a reality in communities of color across the country. And we are doing so in partnership with U.S. attorneys' offices. Today, I am pleased to announce that we have secured a $13 million settlement with Lakeland Bank. The agreement resolves allegations that Lakeland redlined predominantly Black and Hispanic neighborhoods in the Newark, New Jersey area. This settlement demonstrates our firm commitment to combating modern-day redlining and holding banks and other lenders accountable when they deny people of color equal access to lending opportunities. Through this agreement, we're sending a strong message to the financial industry that we will not stand for discriminatory and unlawful barriers in residential mortgage lending. U.S. Attorney Selinger, our partner in this matter, will discuss this settlement in greater detail shortly. Since August of last year, the Civil Rights Division has resolved 4 major redlining cases. Collectively, these settlements have provided over $38 million in relief for borrowers in Houston, Memphis, Philadelphia, and now Newark. Never before has the department resolved 4 redlining cases in shortly over 1 year. Those prior matters include Cadence Bank in Houston, Texas. In August of last year, we put in place a $4.17 million subsidy fund. It includes Trustmark National Bank, based in Memphis, Tennessee. In October, we secured a $3.85 million subsidy fund. Trident Mortgage Company, based in Philadelphia, Pennsylvania. This past July, we secured an $18.4 million subsidy fund, the first settlement involving a non-depository institution, and now Lakeland Bank in Newark, New Jersey, where we have secured a $12 million subsidy fund. Our colleagues in the District of New Jersey have been critical partners in our efforts to combat redlining. In 2015, we partnered with this office to resolve our largest redlining settlement against Hudson City Savings Bank, a settlement that amounted to $25 million. Through that settlement, approximately 2,600 borrowers received mortgage loans in previously redlined communities of color. Over 2,000 of the loans were used to purchase homes, thereby providing an opportunity to generate wealth through home equity. Through our redlining compliance work, we have observed that the provisions in our consent orders yield substantial benefits, not just for impacted borrowers, but also for broader communities and for the lenders. First, we're creating homeownership opportunities for borrowers, and especially borrowers of color. One of the biggest hurdles to buying a home is saving sufficient funds for the down payment. This is especially true as potential borrowers face the challenges of inflation and rising interest rates. The down payment assistance provided through the subsidy funds in our settlements literally opens the door of homeownership to qualified borrowers and puts them on a path to generate wealth. Second, we're strengthening and developing partnerships between lenders and community-based organizations. Partnerships with community groups are often significant to both help lenders gain credibility in communities where they've not had a presence, and helps to connect them with borrowers who are ready to purchase homes. Oftentimes, these groups are essential in helping lenders assess the credit needs of a community. Third, we are increasing business opportunities for lenders. When lenders commit to serving underserved markets, they increase the number of profitable loans that can be made to qualified borrowers. They often go from trailing their peers to leading their peers in generating applications and originating loans in communities of color. Through strengthening their compliance management systems, they're also less likely to be investigated or sued for fair lending concerns. We hope that this settlement sends a strong message regarding our commitment to ending redlining across the nation. We encourage lenders to be proactive in assessing whether they are serving all communities. We also encourage lenders to proactively commit to remedying redlining concerns that have been identified, as Lakeland has done here. I'll now turn the floor over to U.S. Attorney Selinger to provide more information about our resolution with Lakeland Bank.
Thank you and good morning. Home ownership is a pillar of the American dream. It allows people to build wealth, access credit, and lower housing costs. Sadly, there is a long history in this country of banks discriminating against communities of color by redlining, depriving Black and Hispanic Americans of equal and fair access to mortgages and loans. Even the simple ability of being able to go into a bank branch in their own neighborhood. This form of discrimination has been barred by federal law for decades, but still exists today, including right here in New Jersey. Today, we are announcing our continued efforts to put a stop to these unfair and outrageous practices. We have filed a civil complaint in federal court against Lakeland Bank, and we have entered into a proposed consent decree with the bank to end its violations and begin to remedy them. The complaint alleges that from 2015 to 2021, Lakeland Bank engaged in discrimination by redlining and not providing access to credit to majority Black and Hispanic neighborhoods in 3 New Jersey counties, Essex, Somerset, and Union counties. If you lived in a Black or Hispanic neighborhood in these counties, you likely had little opportunity to apply for, let alone obtain, a mortgage from Lakeland Bank. In fact, you probably never even saw a Lakeland branch in your community. That's because, as alleged in the complaint, of the nearly 40 Lakeland branches in those areas, none were in a majority Black and Hispanic neighborhood. The avoidance went beyond the brick and mortar location of branches. As alleged in the complaint, Lakeland unlawfully avoided serving neighborhoods that were predominantly Black or Hispanic. Taking just one example, while serving nearby majority white suburbs, the bank in effect drew a red line around, excluding majority Black and Hispanic neighborhoods in Newark and the surrounding towns. It followed the same pattern in Essex, Union, and the Somerset counties. This meant that all of Lakeland's branches in those counties were in majority white neighborhoods. None of the loan officers in those branches were assigned to service customers where people were mostly Black or Hispanic. And Lakeland gave out far fewer loans to those in these minority areas compared to its peer lenders. Lakeland's peer lenders generated over 5 times the amount of mortgage applications. There were qualified borrowers in these areas. Lakeland just didn't service them. As alleged in the complaint, Lakeland knew about the redlining risks from its conduct in 2015, but did nothing meaningful to stop them. This type of systematic and intentional discrimination cannot and will not be tolerated. Redlining is racist, pure and simple. It has no place in this country. And this office, with our partners at Main Justice, is committed to rooting out redlining from our financial institutions. Lakeland will be required to make reforms pursuant to the consent decree that we are announcing today. The bank will be enjoined, stopped by court order from engaging in discrimination based on race, color, or national origin. The bank will be required to offer equal opportunity to obtain credit, regardless of where the person lives. The bank will be required to establish 2 new branches in communities of color, including building one right here in Newark. The bank will be required to dedicate 4 loan officers to serve neighborhoods previously excluded by Lakeland. The bank will be required to invest over $1 million in outreach, advertising, education, and counseling. And the bank will be required to create a $12 million loan subsidy fund to fund mortgage loans for qualified borrowers in Black and Hispanic neighborhoods in and around Newark. These subsidies, the 3rd largest in the Justice Department's history of bringing redlining cases, will help level the playing field by providing real mortgages for real people in these Black and brown communities, people who want their shots at the benefits and responsibilities of home ownership. Part of the promise of America is equal opportunity. Lending discrimination is anathema to that promise. Like all Americans, communities of color are entitled to equal and fair access to the financial system. I again thank our partners at the Justice Department's Civil Rights Division, Assistant Attorney General Clark, and to commend this office's Civil Rights Division for their hard work and dedication to this matter. Thank you.
At this time, we will take a few questions. If you would like to ask a question, please use the raise your hand function.
I'm trying to find it.
Keith Reed with The Root.
Hi, thanks for taking my question. First, how did these allegations first come to the Justice Department's attention? And second, the settlement that's going to require the bank to start a fund. Are there going to be specific requirements around who qualifies for the loans that'll be backed by the fund, by the money that's put into that fund?
Thank you for the question. The Justice Department launched a Combating Redline initiative that is focused on identifying redlining activity all across our country. And working in partnership with U.S. attorneys' offices, we are evaluating and examining lending activity by banks across the country. We are looking at the levels of loan applications in neighborhoods of color and comparing those figures to loan applications received by peer banks. And this settlement today is the result of the nationwide Combating Redlining initiative that we launched last year. In terms of the second part of your question, I will note that the underwriting standards remain the same for all applicants. What the loan subsidy provides here is a pathway to make it easier for people to obtain loans, flexible underwriting standards to impacted communities. There will be targeting, advertising, and consumer financial education provided to impacted communities to make it easier to put them into the pipeline of qualified applications. qualified applicants in the previously redlined neighborhoods.
Great. Eric Conklin.
Yeah, hi, good morning. Just a quick question. I believe I heard that some of these practices were happening in counties in North Jersey, specifically working for a paper that covers Atlantic, Cape May, Cumberland, and Ocean counties. Any type of redlining practices that this bank had done in any of those counties for any lenders, or is there any evidence of that or anything like that?
Shall I pick that up? The complaint has an exhibit, and there are 3 exhibits, and each of the 3 exhibits have a map that shows the red line around areas where there were no branches and where loans and applications were significantly lower than those of peer banks. So if you look at the complaint, you'll see exactly where that red line is on the map. Actually, it's a blue line, but that is the redlining barrier.
Okay, thank you.
We have someone that is on the phone.
Yes, thank you. This is Pat Battle with WNBC TV. Good morning to you all. Can you tell us how many people you believe may have been denied an opportunity to either apply for a mortgage or a loan in those 7 years that was the investigation 7 years? You said they were aware since 2015. I'm a little confused about the timeline, please. And if you can identify any numbers of people who were denied access, potentially. Hello?
Yes. We anticipate, based on the lending of peer banks, that $120 million in loans in these neighborhoods would have been provided absent redlining. So that's the total number of loans that this consent order is designed to address. The consent order provides for $15,000 in maximum subsidy per individual, allowing thousands of people to benefit from the consent order, which is designed to redress the effects of the redlining that's been challenged.
And I would just add, this is Kristen Clark, that we launched the investigation last year. During my opening remarks, I provided an overview of a prior settlement involving Hudson City Bank, where by way of a $25 million subsidy fund, we have been able to help approximately 2,600 borrowers receive mortgage loans in previously redlined communities. Over 2,000 of those loans were used to purchase homes. This question we'll have to come back to you on once we are further into the agreement. What I can tell you is that we've set the loan subsidy fund at a level where we expect to have a meaningful impact on the formerly redlined communities. We expect that there will be impacted borrowers who will be able to purchase homes, qualify for loans and purchase homes, and be put on a path to generating wealth.
Thank you.
Last question is Matt Friedman.
Yes, hello. Just noticed that yesterday, Lakeland announced that it's merging with Provident Financial Services. The timing is interesting. Did you coordinate that at all in terms of the announcements with the bank? And Does anything change since this will be a new corporate structure in terms of what this new corporate entity, the combination of these two banks will have to do?
So that is correct. So the consent order here not only binds Lakeland, it also binds its successors. So I will note that the proposed merger that was announced yesterday is still subject to regulatory approval. The proposed combined company will operate under the name Provident Financial Services Incorporated. And the combined bank will operate under the simple name of Provident Bank. Lakeland cannot simply create new branches in majority Black and Hispanic neighborhoods by merging with a bank that had existing branches. The consent order here requires the bank to open a new branch in the city of Newark. And this is crucial to the consent order's goal, which is to expand access to credit in Newark and other neighborhoods of color in the metropolitan area.
Great. That's all the time we have for questions. Thank you all for joining us today, and the press release should be out shortly. Thank you.